What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Thursday, June 22nd, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas. Rocking a solo show today as Stu is out on assignment. So I will make sure to hold down the fort. Doesn't mean we don't have a great show. Couple stories. I'm going to keep it light and let you get out of here, but we will cover in our news segment, Pakistan fails in its first attempt in a year to buy gas, and is a big hit to its economy. So Pakistan is attempting to buy some LNG. I'll quickly cover that in our news segment. Then I'll quickly shift over into finances. We'll quickly cover oil prices. They actually rose today off the back of Fed Jerome Powell's comments. We'll kind of dive into those comments and what that does mean for oil and the rest of the commodities market. I want to revisit a little bit of the Civitas buying Hibernia and Taprock Resources for about $5-ish billion. That actually happened yesterday while I was off. I want to revisit it because I found the press release a little interesting, and then there's some great buzzwords that we can dive into and dissect. And then we'll let you get out of here and on your way, guys. But as always, the stories you are about to hear are courtesy the world's greatest website, www.energynewsbeat.com, the best place for all of your energy news. Check us out, dashboard.energynewsbeat.com, the best place for all of your energy news. Hit our subscription is getting close to being rolled out, so we appreciate everybody. You can check out the description below if you want to sign up early for that subscription and to get access to the dashboard. Go ahead and do that. Hit the description below. You can also see all the timestamps on this episode via the description below. The team does a great job of curating that. But let's just dive into it. Let's go into that first headline. Pakistan fails in its first attempt this year to buy gas in a hit to the economy. So Pakistan is attempting to buy liquefied natural gas. They're attempting to tender 6 shipments from October, December delivery. That spot market, which closed Tuesday. This is according to traders with knowledge of the source. It sounds like the reason is several overseas banks weren't accepting letters of credit, which is basically a pledge by the lender to repay funds if the buyer can, from all of these different Pakistani counterparties to purchase LNG shippers, making all of these suppliers fairly reluctant to offer cargoes. This is all courtesy of Bloomberg. This is the issue. When you have a super weak currency and you then want to go buy physical commodities, you have to have somebody be the intermediary of exchange, aka accept the letter of credit. Hey, we'll give the supplier dollars and we will then transact in whatever your currency. But if you can't get a letter of credit from a specific counterparty that the supplier doesn't trust, well, then you're up the creek without a paddle. They've got their counterparty. The suppliers just don't trust them, nor should they. I wouldn't want to take necessarily Pakistani currency. The issue is they're already in an insane energy shortage. They're rolling blackouts, and industry is going to get hit next. So it's really sad what's going on because they need to be able to purchase and get access to gas. The problem is when you can't trust a currency, that's what happens. I mean, this is a long shot forewarning for what if the dollar becomes the destabilize and we move over to other currencies to transact oil in. The U.S. is going to be in a situation where it's going to find itself paying a lot more for energy and having a lot less security, if only because the dollar isn't being used as the medium exchange. So I think this is unfortunate for the Pakistani people. Hopefully they can get this figured out and continue and hopefully get their hands on low cost energy. This serves as a forewarning for the United States and how when we continue to mess with the dollar, this is ultimately what may happen. If you make things so bad that now we move over to the yuan and we have to start quoting the oil price in yuan. Oh, it's 79 yuan today. I don't want to do that. I want to keep saying it in dollars, because if that doesn't happen, then we become at the mercy of whoever's running it. I'd rather be at the mercy of us. That's scary enough than the mercy of somebody else on that front. Shifting now, I think, into the finance realm, we did see oil rise 72.53. That was mainly due to a drop in dollar strength. And again, that dollar fell off the back of some Fed Chair Jerome Powell's comments. Mainly what he mentioned was that two things. We've got rates coming. We've got more rate increases coming. I'm going to pull up the quote here. Let me pull it up right here. Quote, nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. So that obviously is going to tank prices, or going to tank the dollar. He also mentioned that inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, with the process of getting inflation back down to 2% has a long way to go. He did mention that they tend to look at that quote unquote core inflation, which excludes energy prices, which is insane to me. Core CPI. I could do a whole segment on why core CPI is a scam. You're going to give me inflation and not take into account food and energy, things that the entire every consumer deals with. This is when Stu and I talk about the consumer takes it in the drive-through. This is what I'm talking about. We're all dabbling about inflation sucks, and really inflation is what is inflation hitting? Food and energy. But when they go and sit down to debate what they're going to do about inflation, they look at numbers that don't include food and energy. I mean, these are the geniuses running it right now. I could get really, really more worked up over this. And so that's why they're only showing a 4.7 year-over-year rate through April, which is absolutely unbelievable. So anytime you see core consumer price index, puke. You're taking it in the drive-thru. And of course, CNBC is going to quote it. But just remember, CNBC is not looking out for you, the average consumer. They're looking out for the Wall Street guy sitting on, 6th Avenue in his little Soho apartment, trading it up. That's who they're looking out for. They're not looking out for you. So that guy, yeah, sure. That guy cares about the inflation of a boat. It's unfortunate. It's unfortunate boats are costing more. I'm sorry. But the average person doesn't care about. The average person cares about food and energy. So as always, you're taking it in the drive-through regardless. Going back to the oil markets, when the sentiment comes out and in nonetheless terms, kind of the overarching another overarching sentiment that Jerome Powell talked about specifically was the fact that they're coming to his quote was this. We are nearing our policy destination. What does that mean? Okay. We're nearing the point is we're going to continue to raise, and then they're going to be at some point at when we're going to stop. And again, the cheaper dollar makes oil more attractive to investors holding other currencies, hence raising demand. Reuters finally actually tells us something interesting. We got to love that. We did see crude oil stocks come in about 1.2 million barrels draw, which is good to see. So that's going to always help with some upward pressure. So lots of things on the lots of stuff on the from the API, lots of stuff good there. We'll see the API, or we'll see the EIA numbers tomorrow, specifically because Monday was a federal holiday with Juneteenth. We did see inflation slowdowns in Britain. So all in all, lots of bullish sentiment pushing oil prices up. And fairly timely, because we also saw yesterday, I'm recording this on the 21st, so for you guys 2 days ago, Civitas diving in here and taking out Hibernia Energy and Taprock. Those are both funds managed by NGP Capital. As you guys know, Civitas is ran by Kimmeridge, and this is the combination of Crestone Peak, Bonanza, and Extraction up there in Denver. They go ahead and now grab some Permian Basin entrance, really over there in some of that New Mexico, Eddy County stuff. Taprock has some ginormous wells out there, specifically in that Eddy County area. But let's go ahead and go over the highlights here. $4.7 billion. This adds 68,000 net acres, which over 90% of that being held by production, both in Midland and Delaware basins. It's going to go increase the Civitas's existing production base by over 60%, adding about 54% oil, of around 100,000 BOE per day, and 105,000 BOE through the end of 2023. And my favorite quote, they're going to add 800 gross locations, with approximately 2/3 of them having an IRR of more than 40% at $70 BBL. Okay. That, you know what? I like that. That seems to be chiller than ultra premium 3,000 locations. I like that. I mean, it does say premium low break-even inventory. That it also does say that, but that seems more reasonable. So you're saying 600, 500 of these have an IRR of 40%. I'm still taking the under on that, but it just sounds more reasonable. IR guy of the week right there. This is where I laugh though. Attractively priced, immediately accreted to financial metrics. This acquisition is attractively priced at 3 times 2024 estimated adjusted EBITDAX after taking into account the consummation of the transaction, the consummation of the marriage. And it says it's in line with recent Permian transactions. I saw that 3X number and I squeezed a little bit because we've been seeing 2 to 2.5 as of recently. So I went and pulled the last 2 Permian transactions. Remember, we ran them on the show. Earthstone Enway announces a $1 billion Delaware acquisition. What's their purchase price? Oh, 2.7. Okay, so close. Well, then we had the last one. Remember, we had Chevron buying PDC. Well, in the press release, they don't necessarily tell us what the euro or what the EBITDAX multiplier is, but we do know that it's a 6.3 all stock valuation. They do acquire some debt, but we're going to leave the debt out. Their 2022 EBITDA was 2.9 billion. So if we do the math there, you're looking at 2.1. So you got an average of like 2.4, 2.5 on your metric multipliers. And we now get in the press release, attractively priced at 3X. Eek. It's a stretch, but they do expect to generate 1.1 billion of free cash flow in 2024. I mean, good for them. It's $70 and $3 Henry Hub. I love how people are saying it's $3.50 Henry Hub. Like, it's not $3.50 Henry Hub. Gas is $2.55. But whatever, we'll still run $1 higher because it looks better in these. And apparently they'll have a more balanced portfolio. It's true. Civitas is all in Colorado. This gets them into the Permian. Why not? If you're Kimmeridge, this gives you an opportunity to maybe look better, to get acquired by somebody like Diamondback, to get acquired by somebody like Chevron, or maybe not Chevron, a ConocoPhillips, one of these larger Permian players. Maybe Pioneer wants to make an acquisition on some degree. So I think this definitely gets that. It's really interesting. They're funding this mostly by debt. So you've got there's 4.7 billion. You got 2.7 billion of unsecured senior debt, some stock valued at 950 million, 600 million of borrowings under the undrawn credit facility, and 400 million of cash on hand. Woo, woo, woo. This is a leverage deal. Unsecured senior debt. Good luck on this one. Good luck on this one. It could play out. I've heard great things about TapRock's inventory. Rumor has it that Eddy County stuff drills like butter, but the takeaway capacity sucks. So in this day and age, you want oil anyway. Who cares about gas? But still, there's some big wells down there. We looked hard at them at one point, and that Eddy County stuff. It'd be nice to be down there. The problem is you're in New Mexico. It's federal land. It gets interesting. We were a little bit too far west in those canyons. Point is, it could turn out great. Pretty leveraged though. Things have to go pretty good to see. So hopefully oil prices don't tank at $72. Again, things look bullish moving. This gets them into both the Delaware and the Civitas, which is pretty interesting. And it'll be good. So with that, guys, I'm gonna go ahead and let you get out of here. Appreciate you checking us out. Email us questions@energynewsbeat.com. For Stuart Turley and Michael Tanner. We'll see you guys tomorrow, folks. Peace.